All right, welcome again. Good morning, good afternoon, and good evening from wherever you're joining. My name is Foster Akugri, and we are on day 2 of the Fintech Replay 2025. Yesterday, we examined how capital moved and strategy shifted. Today, we are focused on what actually got built and the constraints that have shaped how it was built. This year has been a very interesting year of product pivots, product innovation, and it has become more intentional. We've seen patterns and trends around regulations being moved from to the sideline, the design into the design room, and the ecosystems are maturing now as founders, regulators, and partners learn to move together. We've seen a lot of collaboration, a lot of partnerships to get into new markets, to augment capacities, to complete supply chains and value chains, and to improve the customer's experience ultimately. And I'm pleased to be joined today by Zacharias Msalu, who is the co-founder and CEO of the Africa FinTech Summit. We also have John Egu, who is the COO of AutoCheck Financial Services and a co-founding member of the AutoCheck team. And then we have Daniel Kagem Ndahiro also joining from Nairobi. He is the CEO of Credify. And together we are going to bring an operator level perspective on building, scaling, and navigating the regulations in real markets. And I'm very excited. Today's conversation is focused on product innovation, regulation, and the trade-offs behind scale. What are some of the choices which people have had to make as leaders, and in your own capacities working in the same ecosystem? What has that done for you? And more importantly, what signals are you seeing that are going to inform 2026? So I would quickly yield the floor now to hear first words from everyone. Maybe Zach, you can go first, and then we'll hear from John, and then Daniel, and then we can take the first segment of the conversation on.
Thank you very much, Foster. Glad to have you here, John and Daniel. Really excited for this your review. It's been an exciting year, not only from the public markets and investment side of the activity. As we discussed yesterday, Africa has already secured 4 IPOs in local exchange, which was fantastic. We discussed that yesterday. But today, from the product and innovation point of view, Africa has also a lot of significant strides, which we'll touch as you pose the questions later on, but very excited. Africa is predominantly a mobile-first continent, and Africa has a lot of talent. With the right balance between innovation and policy, then we're going to see even further depth of innovation in the years to come. But we'll delve into the details. Very happy to be here.
Super. John?
Hi, guys. Thanks for having me. My name is John. And like Foster introduced, I think at AutoCheck, what we are essentially doing is democratizing access to vehicle financing in the continent. Today, we're doing that across 9 markets. And in reality, the conversation around product development, regulatory challenges are critical things that we deal with on a day-to-day basis, right? So I'm quite happy to engage today, and we'll discuss on the critical subjects. Yeah, thanks.
Super. Mr. Kagem.
Hi, how are you? It's a pleasure to be here. Like Foster said, my name is Daniel. I'm the CEO and founder of Credify Africa. Credify is a global trade platform purpose-built for the African SME importer. We provide financing, shipping, cross-border payments, and end-to-end delivery for importers. It's a pleasure to be here and discuss 2025 in review and plans for next year.
Super. Thank you all very, very much. Like I said earlier, it's been an interesting year of pivots. 2020 definitely, and yesterday in my reference, I said 2020 was a great reset in financial services. A lot of pivots, a lot of business model change. Things were best. And we experienced capital injection booms between 2020 and 2022, and a very hard reset and a hard stop. I call it a great freeze, VC freeze, right? And it's shook the ecosystem heavily with a significant drop of almost 46% in capital injection from the VC space into the market. And again, 2023, we still had a dip, 26%, which was also a big impact on the ecosystem. We've seen 2024, we saw 2024 rebounded. 2025, we've seen very interesting investments. We've seen very, very interesting patterns of innovation happening. We've seen more intentionality around infrastructure build. I know Jim Ovia says Africa's business model is BOY, bring your own infrastructure or build your own infrastructure. And often it sets back or increases the marginal cost of launching products, launching services in new markets. And if you fully operate in one market and are laterally expanding into other markets, you start to experience how painful it is to completely overhaul your business just to accommodate that new market. And for me, this conversation is going to help us reflect. There's been a lot of expansions happening. There's been a lot of pivots happening, and each one of you sits in a similar capacity where you've seen these things happen or have had to be in the boardroom to make some of these decisions. So reflecting on 2025, really, I feel like it's felt like a year of acceleration, less of acceleration and more of recalibration. People taking a step back. We've seen businesses fold as a result or take a big hit just to transform or reform. How did this shift show up in your own teams and the product and the decisions you've had to make from a broader ecosystem, looking at others and tracking their growth? Examples of interesting pivots and product decisions that were made in 2025 that you found very, very interesting. So you can take turns and share your perspective from where you sit.
I can start, Foster. So I can take the very interesting and exciting innovation in product and also regulation point of view, because we serve the ecosystem, right, Foster? So we speak on behalf of the entire continent and the ecosystem. So what we noticed this year, and what I'm very much excited about, quite a few, but the first is around mobile money. We said that Africa is a mobile first continent, and Africa has actually gifted mobile money to the world. So mobile money started in Africa, and how that mobile money became innovation is because actually it was the regulatory policy and regulators and policymakers accommodating innovation in Kenya. So they had this motto, innovation before regulation. So it is that innovation before regulation discipline and motto that the Kenyan policymakers and regulators allowed M-Pesa to become what has become as a mobile money innovation. So that in policy space accommodation has brought and birthed mobile money. And we know that the mobile money is now instrumental for financial inclusion across Africa. So some of the most exciting development I personally loved about 2025 is those innovations around or on top of the layers of mobile money. One particular that comes to mind is the innovation by unpacks and PUBs. So as Darif, founder of unpacks, has been saying, why don't we transfer money just like we're sending text between two mobile addresses? And that is the innovation now made possible by a partnership of unpacks, MTN, and PUBs through the Continental Free Trade Agreement. Now, a pilot scheme is going between Ghana and Nigeria. So Ghana and Nigeria customers on MTN and unpacks can now transfer money. So that pilot is a huge step on the layer of mobile money innovation Africa has birthed, and really looking forward to that being expanded across markets. I am also very much excited about the regulatory innovation that this year has shown. That is one particular is the virtual digital assets innovation and policy making policymakers' dispensation in Ghana and Kenya. So both countries, Ghana and Kenya, have now issued their virtual digital assets regulation. So now it's very clear for innovators to operate within those jurisdictions because there is a clarity and also regulatory oversight on those assets. And South Africa has been doing fantastic over the years. Very happy to see Ghana and Kenya has followed. Forex is a big issue, as Foster, you highlighted at the start. One of the concern we have for Africa to trade against with itself is that we have 54 countries who are transacting moving goods, but moving goods follows by moving money, but they have to rely on third-party currencies. So PAPS is changing that, and the launch of the African currencies marketplace is a huge innovation for this year. So basically, two traders, two companies within two African countries can now leverage the African currency marketplace of PAPS to transact their goods and services without the need for foreign currency, third-party foreign currency. That is another innovation. Fintech license passporting, as you know, we've been very fond of that innovation. Now, that will be very much interesting for Daniel and John as well. Any African fintech startup that has gone through a stringent due diligence in one African country is replicating across jurisdiction, tiring, prohibitive. So now any startup that is licensed in Ghana will automatically be passported to Rwanda. Would look forward to seeing more of those innovations expanded across countries, but that is one innovation that stand out. And countries across Africa have also started launching either their own switch or their own digital currency. Rwanda has launched the eCash, Ethiopia has launched the EthioPay, and also Liberia just launched this week their national switch. That is another innovation. Yesterday, we also joined the live session by Coinbase. Base has launched the influencer and creators space where now African creators who've been fantastic, talented, but they were not being remunerated for their talent because there is no platform. We have so many platforms now we're actually making it possible for creators. Now, Base has made it possible for them to be rewarded for their talent. That is going to be an increasing concern.
Thank you very much, Zach, for that very, very interesting download. You've been authoring our newsletters a lot, so you definitely can give us January to December in terms of timelines. John, I see you have some reactions to some of the things Zach has said, and probably from your own perspective, what have you seen in the market as a pattern that you would love to throw in the air? And
Hey guys, am I audible?
Yeah, we can hear you loud and clear.
Okay, amazing. Yeah, thanks for starting. Zachariah, very interesting discuss there. But if I take a jab at this, I think there was quite a lot of regulatory shocks across Africa this year. You could see the resonating effect from the central bank in Kenya with the digital credit lenders license. What happened was overnight, a lot of businesses moved from legality to illegality, and that can change a lot about the dynamics of business operations, right? And if you move a bit to Ghana, I think BUG is also ruffling the waters a bit with the whole renewed focus around credit lenders. As a business owner in Africa, you have to kind of deal with these challenges around regulations. And out there, I think it's looking at it from two prisons, residing and then just really starting up and doing business without being effectively compliant. But I think the call this year would be for a bit more innovation from the regulators to understand the nuances that are involved in it. Because I think everyone of us can agree, it takes quite a lot to really attempt to solve the realistic challenges that we see in the continent. Let's take identity verification for example. Foster, you have been around. maybe jokingly you'd have like 5 identity cards that you have to shuffle around when moving across Africa. Whereas
So
we could all benefit.
I am
I'm kidding.
Ghanaian passports, which happens to be one of the Ghana, so in Africa.
Whereas we can we can all benefit from a lot of uniformity that then really drive a lot of scale and product ease and movement across the continent. Yeah, so essentially from where I sit in the automotive space, which is quite a lot of heavy lifting in the continent, I think there's a need for regulators to first understand, because in Africa, the conversation around affordability is a big thing, right? People can't afford a lot of the services. So the more gates and barriers we put, it essentially affects how we distribute in the continent. I think these are the 2 cents for me.
All right, Daniel, reactions?
Yes, it's been very interesting listening to many of the speakers before me. I think one thing that stands out is on the regulator side, we're very excited about what's happening in Kenya with the Virtual Asset Service Providers Act. We think next year there's going to be a lot of adoption in terms of crypto, stablecoins, and more adoption in that space. It's definitely going to impact the payment space. We're excited about that. And then for my side, because I sit I wear many hats. So I wear cross-border payments, lending, and logistics. On the logistics side, I think there's always a need to engage regulators. This year, we saw change in regulations in Uganda that affected SME importers in terms of the way they import. But then that also brought up a very interesting aspect in terms of how to do business in Africa, right?
Yeah.
Do you mitigate your risk by focusing on one country or multi-country, right? So sometimes your hands are tied and you have to figure out how to operate in multi-country, given the BYOI, bring your own infrastructure. So in your infrastructure, which parts can be scalable, which parts can you easily replicate across different multiple countries? I think maybe focusing on how to scale those, and then finding partners who can fix the infrastructure that you cannot scale with. So I mentioned regulators. I will also mention partners. There's been a lot more partnerships this year with more of the established players partnering with the fintechs. I expect that to continue into the next year. This year, I mean, we can't mention this year without talking about AI, but I think the markets in general are maturing more around use cases of AI. So it's not just the hype of, yes, I've embedded AI in my systems, but what is it actually doing for you? So I think John mentioned identity. So if that can even scale further, how is AI going to enable you to, to handle fraud detection at scale, supplier verification, and many of those other use cases? So I think this year we have sobered up to actually focusing on the use cases of AI, and I expect that to explode more in next year. And yeah, that would be my submission for now.
Thank you very much. I think you guys have expressed some very interesting perspectives and intersections as well. I've tried as much as possible to not make our conversation so biased towards AI and crypto. Last year, it was crypto. This year, it's been AI. 2 years ago, it was blockchain. 3 years ago, it was big data. And yeah, so we are really, really in the AI era. No matter what we do, at some point, we have to accept our realities and the limitations surrounding our ability to do more. And that brings me to the conversation about market realities, local trend versus global trends, constraints, trade-off, and the ecosystem's maturity from policy, infrastructure, regulations, trust, all of that. We see a lot of deficits. We see a few gaps here and there. And it has become very unavoidable design constraints that you have to factor in. That your marginal cost of launching new products, improving existing products, new markets, etc., is obviously you have to factor in the cost of constraints, the cost of trade-offs. But from my perspective, I see it's I see the ecosystem mature out of this. No more seeing it as an obstacle. We talked about payment fragmentation. We talked about intervention currencies like USD being used as an intervention currency between two African countries trying to trade goods and services, and obviously making the dollar stronger in the course of that experience. We've seen significantly how PABs and other players like MTN are piloting cross-border payments using alternate means to lower the cost of transactions, and all these are heavy. All these are taking the frontier of what we will call the new we will call I want to give it a title, but again, it will definitely come to me before the end of this conversation. I think my question out of the conversation about market reality and constraints is, what are some of the hard trade-offs you've seen this year, and some that you've had to make between speed, compliance, and scale? And also in the market, others have had to make similar moves. I think some people face the consequences of making some of these decisions around constraints last year and have seen their businesses fold this year. I would love to hear your thoughts on failed products, constraints, and trade-offs that have had to happen within your team and even in the ecosystem, things that could have been done different, and lessons from them, from the broader ecosystem. So we can start with you, Daniel.
All right, you bring a very interesting point. I mean, I can't even go further without mentioning the importance of governance, right? So before, it was speed at all costs, which was, the, 2000, blitzscale, yeah. So there is need for a lot more discipline, and investors are also looking out for that. So it's more about how can a team execute with the right governance structures in place, with the right compliance. So now when you talk compliance, you're talking about partnerships with regulators. You need to be on the same page.
Yeah.
But it all starts from within. What are your governance structures in place? There's a reward right now for founders who are more disciplined with obviously finances and execution and growth, right? So for me, that's the most important thing, governance. And then the second point I would like to mention is, you talk about, comparatives between, what's the reality on the ground. With Africa, I think it's becoming more and more pronounced that there is a need for an emphasis on a phygital model, so physical and digital. So yes, there's a digital aspect which will help you, run your operations smoother and scale your operations, but you need the digital aspect because Africa primarily is a community-based, it's a trust-driven market. So you have to sort of balance both aspects. You cannot go full digital without building community, without building trust, and the human aspect, right? So, and like you mentioned, it's not about going back to AI, but I think Africa has the best chance to survive this because we have to combine AI plus the human aspect to help companies grow, serve customers better, and scale the business.
Fantastic. John, what are your reactions?
Yeah, so I think I kind of agree with Daniel. Yeah, it's no longer speed, but really quite a lot of governance while building. Because whenever you interchange or shots or cross place, if I use that word, you get to take the hit later on, right? So if you're speeding into the wall and you're not quite compliant and paying key attention to your governance structures, that's a big problem. But shifting a bit, I think 2025 was also there were quite a lot of shocks around capital movement, right? Because you saw a lot of companies in the market trying to raise, and maybe you had things like funding winter and all that. It tails back to how profitable are you building, right? Because most of the investors are really asking for profitable business, like stop burning through your cash, but really build a sustainable track record or track run for your business. In my view, I think quite a lot of us struggled with understanding the structured capital movement. And looking in the context of Africa, a lot of currency volatility, right? how a lot of people deployed USD without hedging, right? And if there is any movement, you are left carrying that bag. I think it was also something that resonated across the ecosystem in 2025. And for us, it's learning early and staying ahead of that curve to see what are the hedging structures available, which of the banking partners have like Pan-African reaches that can replicate the structures that makes the capital movement problem easier. So those are some things I could add to the conversation for stuff.
Zach, what have you seen?
Yeah, so our theme for this year is from Africa to the world. So what we've seen is that African startups, at start, they are already global in mindset. So Nigerian startup doesn't necessarily look Nigeria or even Africa, as big as it is with 1.4 billion population. When it comes to for a fintech startup, it's too small. So they have that global mindset. So it's two sides of a coin, right? So they start with a global mindset, but they find it easier to expand to Europe, America, Latin, and Asia because of the market dynamics and the disposable income and their necessity to generate, dollar-denominated revenue. From that point of view, it's a positive, but also on the other side, why do startups find it easier to expand globally than to next door or the other 20 or 30 African markets? So there is always a trade-off, not necessarily from a revenue point of view, but also regulatory and policy-making space. So until it is easier for an African startup with a global mindset to expand to other African markets before they expand to globally, that they will have that continental problem. That is one concern and a trade-off we've noticed. And secondly, there is a focus of sustainable growth. Daniel and John mentioned about speed. In the past, we've been like, scale up at whatever cost. But now we've noticed about the focus on profit and sustainable growth than scale. So startups are reviewing their, bottom line, their customer acquisition cost, and growth. So the trade-off between profitability and the scale is being reviewed and is going to be even deeply rooted in the philosophy and modus operandi of startups in 2026.
It's very, very clear. I think it's the one for me, 2025, the clearest lesson I took out of it was really about the quality of the decision making in the constraints. We've seen central banks pivot heavily from not taking a stance around digital assets and now starting to publish policies around digital assets. The conversation about passport licensing had been going on for a while until it was recently announced as well. And the pilots have really gained a lot of traction. People are really excited about it. The decision to set up PAPs in 2018 looked promising, but there were hesitations along the line as traction was not being gained. This year, we saw some big decisions being made and people starting to accept what it means to break out of the fragmentation in Africa. And for me, it was very clear, and based on my time so far studying the financial services industry, the biggest constraint has always been people and their egos standing in the way of innovation, shifting from competition to collaborations, realizing that the promise to the customer is the single promise, and our mission has always been financial inclusion, which is the ultimate end goal of all the innovation that we build to serve different segments of the market. And so it brings me to the next conversation about looking forward. What are some of the things that, because it's very, very typical that the decisions we make today determine the quality or set us up for tomorrow. And regulatory directions this year, sorry about that. And regulatory directions this year have been very, very clear in setting the tone for, hey, our regulators are starting to see more value or more reason in working with us innovators on driving policy faster and forward to be able to attract the right investments and invest in the right national infrastructure required to fully maximize the opportunity payments and financial services at the intersection of other sectors give to us. So again, decisions at the policy level, at the regulator level, has been very, very proactive than previous years. Decisions at organizational, at maybe investor level has also been very, very interesting. We are seeing more selective strategic investments, mergers and acquisitions happening, and partnerships to win markets, partnerships to better solve a problem and give the customer more value has increased. We've seen decisions around local IPOs happening for products that are being launched on the market to allow others to participate in that. And it's very, very exciting, and I think next year is going to be very promising. To come almost to the close of this conversation, I would love to hear from your perspectives. What's the real question coming out of 2025 about who hasn't moved fastest, but who has had to adapt? What really is the question we should be trying to answer as founders, as investors, as regulators, to really set us up for 2026, learning from the patterns of 2025? And in your own box, as you look into 2026, what are some of the assumptions about building and scaling in Africa that you think people really need to rethink? Like, this was a hard lesson I learned in 2025. And I'm taking this platform to put it on the record that, dear founder, dear investor, dear board member, dear regulator, please do not do this. Please, let's do this. I want to hear your manifestos for 2026. Yeah.
Okay, if I go first, I think 2026, from my perspective, it's a year where we can answer the question: will there be a lot more local capital play and players? And what do I mean by that? Right, the continent, like I keep reiterating, requires affordability, and access to affordability would come from cheaper capital. So, in essence, we need the local estimates is that look out to see how much we get to see local capital come to play, be it PEs, really African PEs, or the banks that have sizable liquidity in the market, because we have got a couple of them really playing for the continent and creating that flywheel effect. Another thing would be acceptance of, obviously, a lot of cross-border initiatives, right? Let's say parts for some of the payment challenges. So those are my two hot takes going into 2026.
All right, I'm going to expand on what John has said. When it comes to capital, local capital, I think across the board, we're seeing more interest globally in private credit. So as private credit players, grow bigger and gain the capacity to disburse a lot more private credit to founders and different startups, I think we should find a way to deal with local banks. Local currency debt is always much more preferred. So I expect us to be able to bridge that gap between founders, startups, and local banks. I'm excited about that. And then when it comes to payments, it might be controversial, but I don't think Africa needs another payment app. What we need to do is to embed payments in workflows that already exist within trade, agriculture, healthcare. I think there's a lot of opportunity there, and there'll be a lot more growth there from integrating payments in existing workflows. When it comes to cross-border payments, I think we're just tapping the surface. With PAPs, I expect more intra-Africa trade, but even with cross-border international trade, right? A lot of focus on payments has been remittances into Africa, but what about trade, right? So we trade mainly with China, we trade with India, the UAE, and mostly Asian markets, right? So how do we deepen our relationships with existing partners that we can integrate with on the China side, India side, Dubai side, for faster payments. These are things, like you mentioned, these are things that are realities on the ground. Time matters. Someone will lose a sale. Someone will, some supplier will give out goods to another customer if a payment is delayed, right? So these are the realities on the ground, and we need to act faster to solve for these issues as we go into the next year. So those are some of the things I'm excited about. I'm also excited about more focus on governance to strengthen the ecosystem, because when everybody's strong, we all win, right? And we need to paint a good picture for the ecosystem as a whole.
Thank you very much, Daniel and John. For me, I will focus on startups and also regulators. As at Africa FinTech Summit, at every city we go, we have closed-door roundtables between regulators and startups. And Foster, as you've noticed, most of the time is that private roundtable. What regulators want to achieve and what startups want to achieve is almost the same. Both innovation, solving real problem while protecting consumers. But there is a disconnect and miscommunication between regulators and startups. So what I'm encouraged to see to an extent, and what I want to see, and I hope will happen in 2026, is for startups, take regulators and policymakers as your partners. They are not your enemies. They are your partners. Explain, avoid the jargons, whether you're building on legacy or on-chain rails. Explain the real problem you're solving, what protective guardrails you've put protect your clients and the ecosystem, and partner with regulators. So collaborate, explain, and onboard regulators in your journey so that you have that protection and partnership. And for regulators, I just want to repeat what Kwame said in Accra during our fireside chat: lean in, accommodate, and support local startups. If we don't support our local startups, it would be easier for the global startups, the global companies, the scale-ups come and actually deploy their services and products in Africa. While not protecting our startups, those talents will go elsewhere. So by fostering and supporting startups, you can support the ecosystem. And finally, sandbox are not just for ticking boxes. So startups you supported in sandbox, let them graduate, let's come to real life. And once sandbox test has been done, let's expand it. So sandboxes, yes, they are flourishing, but we want to see real impact and real life the startups operating out of sandbox in 2026.
Thank you very much. I think that anchor closing Zach is fire. Sandboxes are not for ticking boxes. And we've seen a lot of patterns around the regulators launching sandboxes just to show that they are catching up. But really and truly, these sandboxes are not practical and are not in operations at all. So I think thank you all very much for this conversation. As we wrap up today's conversation, one thing has been very, very clear, that there wasn't a limited progress this year. If for anything, the patterns showed clearly that businesses and products and founders were shipping in their strategy. That recalibration was very, very clear from a regulator standpoint, from an infrastructure development standpoint across the continent. We've seen more capital discipline, even though we recorded some companies being dissolved and companies announcing their closures as a result of challenges surrounding setting up from 2024, 2023. Your incumbent decisions definitely impact your decisions tomorrow. And some of these decisions, either whether made under pressure or are now shaping what's the relevance on what the product relevance are. So we've seen breakthrough products, we've seen strategic partnerships that do not make sense but are fully and clear now in terms of market direction. We've seen market shares or product market shares move in between players. We've seen long-term resilience of the ecosystem, because we are still, I don't know if we are still we'll call ourselves nascent or graduated out of the nascency of the African startup ecosystem, which is about 17 years old, if my math is right. Tomorrow we are going to be having a very interesting conversation And as we wrap up the series, we'll focus on expansion, scaling, and ecosystem intelligence. Panelists here, you're welcome to join us tomorrow. We are going to focus heavily on how fintechs are navigating the markets, how they are sequencing growth and positioning themselves for the next cycle. And we'll be joined by Andile Masuku, who is the executive producer and founder of the African Rounder podcast. We also have Jeremy joining us from Ezra. He's the regional director for Africa, banking relationships and partnerships. And then we'll be having Tendai Tsirai from Mukuru as well, also joining us. And they are going to be unpacking what 2025 revealed about scale in the ecosystem as we head into 2026. And what assumptions founders and investors should be rethinking or thinking about. And the same time tomorrow, 10 a.m. EST, 3 p.m. GMT, and 6 p.m. EAT. It's going to be live on YouTube and LinkedIn. Thank you all for our viewers who joined online on LinkedIn, on YouTube. Please feel free to share your comments and your questions in the chat, and we'll be happy to share them in the next session. So thank you all. We are almost nearing the end of this season, and it's very exciting. I don't know if you guys are excited, but Merry Christmas in advance to all of you, and wishing you a good season.
Happy holidays to you all.
Guys, happy holidays. Yeah.
Thank you very much. Mickey, over to you.